Hey guys, I know it's been forever since we've done a small talk, but we're back.
New location too.
New location.
For a small talk.
Yeah, we're on the couch. So today we are going to be talking about
finances.
We are going to talk about them in general, but this is kind of more focused in on couples, but we will be talking about single people as well. Disclaimer, we are not financial advisors. These are just some tips and some things that have worked for us, and we are just going to share them with you guys. So I'm going to let the hubs take over, and yeah.
Alright, so if you guys see me look down every once in a while, this topic is so comprehensive. There's so many ways that this can go. I've created a few notes just to kind of keep us on par. So if you see me look down a little bit, that's what that is. Usually we speak extemporaneously. Maria was right. We're not financial advisors. These are just some tips that we've learned. But we're going to kind of start like wide out and kind of work our way down to like some practical tips and solutions that we use to kind of manage our finances. So if you have questions, leave them in the comment box. This could easily be a series of talks that we have, but please enjoy. So the first thing that we kind of want to cover is like in the world of finances, we're a married couple, we're kind of established, but also getting established as well. So kind of in a unique period, which we'll talk about that a little bit. But what's your financial makeup? You really need to understand that first. And what I mean by that is, are you a spender? Or are you a saver? Okay, you can't really stop there. Well, what's your income look like? All right, where are you at right now? What is your career trajectory as well? What's your debt load? What are your bills? That's just an example of really understanding on a really high level, where are you at in a financial sense? Okay, this isn't, my investment strategy in my portfolio. This is like the nuts and bolts. What do you have coming in? What do you have going out? What do you think you're going to have coming in next year? What do you think you're going to have coming in out the next year? And so on and so on. So when I think back to when Maria and I got married 3.5 years ago, we were in a very, very different position than we are right now. Okay, I was coming off of a divorce. Maria was coming off of a divorce. We were just barely kind of getting by, just barely making it. I'm a corporate guy. Maria is more of an entrepreneurial. She works for herself. Okay, so our cash flow situation is very, very different. Both of us have spend-save tendencies, but if I had to kind of call it, Maria's a little bit more of a spender. I'm a little bit more of a saver, but that doesn't, when you say someone is a spender, that's not a negative thing, okay? Because her cash flow, and she can speak to that a little bit, comes in just a different interval and cycle than mine does, which is very planned, either every 2 weeks or every 26 weeks, or right now I'm paid at this current company I work with every week. You want to talk a little bit about how you get?
I can get paid every day.
Yeah.
So spending for me sometimes is making money for me. So I am a little bit more liberal with spending because I know I can make money. I think if I was on more of a strict budget as far as getting a paycheck and knowing exactly what it was, post-tax withdrawals and things like that, I would be less apprehensive to spend. But when I do spend, it's typically to grow my business or to do something within the arena that are for my home and for my family. But yeah.
So when you think about our orientation, remember this first thing is like understanding your financial makeup. We talked a little bit about Maria being a little bit more of a spender, me being a little bit more of a saver. So that is an important part of our orientation. One of the things that I had to really adjust to early on in our makeup is, we made a very strategic choice, and it makes a lot of sense for us. Her income is very variable. She doesn't really have a cap on what she can make. I pretty much know what I'm going to make annually, but we choose to live off of my income. Okay, that makes a lot of sense for us, but it also plays an important role for us being able to plan. So when you have a partner or you're in a situation where you have one person who has a very fixed income and somebody else that has variable, we would probably encourage you to live off of the fixed, okay? And for the variable, if we need blinds or if we need something, I can ask Maria, hey babe, can you, do a couple of extra heads, or what's your situation looking like this month?
I'm a hairstylist.
She's a hairstylist, yes. She's a hairstylist. All legal stuff going on here. But you know, we can talk about that and understand that, you know, she can kind of turn that spigot on and off, relatively speaking, much quicker than I can. All right, when you start getting into things like debt and bills, guys, that's a reality that we all have. I walked into our marriage with a debt load. Maria walked into our marriage with a debt load. We both had bills. So when you're single and you're alone and it's just you and all you have to do is worry about what you're having to pay, that's one thing. But when you start adding in a family and the overhead costs that goes with, so think about, a lot of us have student loans that we have to pay back. We're looking at a mortgage, which we've just acquired as well. There's car notes or other things. There's a few rules that we've set into play. I know for us, I've changed our student loan bills to a 25-year payment. There's a lot of options that you have. There's a 10-year payment, which is pretty standard. There's a graduated payment based on your income. There's 25 years, and there's really no prepayment penalty in all those, so we're paying a little bit lower, so it'll take us a longer time to go off, but we have a plan, which is one of the most important things, and we've communicated that to each other as well. So we know within a certain amount of time that even though we're paying on a 25-year cycle, we plan to knock that out. We have another rule for debt and bills, understanding that you know, we have 2 cars, and we have a rule. When we first got married, we didn't have a car note at all.
Neither one of us.
Neither one of us. We're driving old cars. Maria's car is over 10 years old. My car
13.
was, yeah, her car's 13.
My car's 13 years old.
Over 200,000 miles. My car at that point was 8 or 9 years old, over 200,000 miles as well. It kaput, and we had to get another car. But we've made a rule for us that we won't have more than 1 car note. So that'll mean paying my car off before we do anything else for Maria's car. So now, something could happen to her car. You know, we have some plans for that, but that's our plan right now under best case scenario. When it comes down to bills, you know, especially when you're merging a household as well, you know, there's things that were important to one spouse or one partner and maybe not the other. The best thing to do that we would encourage you all is to have conversations about where your bills are at. You know, it's things like utilities and rent. And when you start adding up subscription fees to the gym and to Hulu and to Netflix and to Amazon, and so wants a dog, well, that means you need to have, you know, health care for that. You know, we laugh about that, but early on, that was something that we had to talk about.
That was a big pickle in our relationship, me getting Coco.
Yeah, because I'm a nickels and dimes guy, so I'm extrapolating over the life of the dog. You know, the dog lives 10, 12 years and $40 a month. You know, this is how much it could cost, you know, us over the lifetime. It's hard to place a value on, at that point in our marriage, and Maria was home alone a lot, and she needed that companionship in a new city. It's hard to place a value on that. What I can say is that we have a lovely little Maltese, and it was worth it for us. But those are some of the things that you have to be transparent, talk about. Another piece in that we would recommend in this arena is understand what part of your debt or your bills that if times got tough, you could relinquish. So when we think about that, cable, we could cut our cable in half. We could cut our gym membership. We could cut Netflix. We do a lot off of Amazon, but you know, that's a 1-year thing, so it's not a monthly subscription. But you lay those things out on the table, those frivolous, you know, extra expenses. You probably, if we had to get down to just eating, no eating out, if we had to get down to eating very, very basic or very simple, very, very repetitively, there's probably in anyone's given budget, you know, $100, $200, maybe $300, $400 maybe of just extraneous money that you're spending in your budget. Even if you're not going to cut it, I would recommend looking at it every once in a while, because you'll be surprised to see, like, holy cow, you know, I've got all of this money going out to little things that kind of add up. All right, kind of the fun part, hopefully for most people, when you're thinking about income, and I touched on that a little bit in terms of spend versus save, but I would really encourage you all to think about where you're at right now, where you want to be, really challenge yourself. We wouldn't be at this stage in our life with a son, with a home, and with a pretty great trajectory without making a bold move. You know, I told Maria she had a goal for, you know, me being able to take care of the family. At that point, we really had to work together a lot when we were in St. Louis. And my prayer was to be able to do that for my family, but that required me to uproot our family and move to another location as well. And I realized that
sometimes you have to go to grow. And I was willing to leave behind my
you took a big pay cut, basically. You know,
I was
career cut.
I was a full-time hairstylist, and that meant that whatever he moved us to do had to cover what I brought into the home. And thank God it was a total blessing it did. But yeah, so like, and I was willing to sacrifice that because of the lifestyle that I knew that I wanted to have in the long run.
Yeah, so I've moved a lot. Maria's moved some as well. We both, grew up in St. Louis, and we both moved. I've worked professionally in Arkansas, Alabama, Tennessee, and Missouri. Maria's worked professionally in Missouri, Tennessee, and Ohio as well. So maybe that's another separate topic about, how we qualify looking for a move and house and apartment, but just know that that's a big deal, okay? But when you start thinking about 3 years out, 4 years out, 5 years out, we really encourage you, don't live so strictly in the moment. Living in the moment can cause you to make, and Maria laughs at that a little bit because she's a little bit of a liver in the moment. I'm not talking about that, like enjoying, focusing in the moment, but I'm talking about not connecting all of your series of choices, because you're gonna get paid next Friday or the Friday after that or whatever your pay cycle is. But what are you gonna do with your paycheck a year from now? What are your plans a couple years from now? Do you get a cost of living increase? How do you negotiate for a raise in your performance review? If you get a bonus, what are you going to do with that? Income taxes around the corner. What are you going to do with that? Some specific strategies on income tax that can help you. Are you going to spend it? Are you going to save it? All of those things are important.
Are you going to pay down debt?
Or are you going to pay down debt? It's the most important thing is to have a plan. Okay. So that was like a big chunk. I probably spent a little bit more time there than I thought. But as we're talking, it's just really, really important that high level picture of your financial makeup. So the next thing really is, what season are you in? All right, now it sounds a little bit like, Pastor, I'm not trying to go to a religious standpoint, but if you think about the seasons of life, it kind of makes sense that there's a time of, of birth, there's a time of growth, there's a time when things get pruned, and then there's a time when things die. Your financial life can cycle like that as well. I know when I graduated from college, I had like 7 or 8 job offers. I picked the highest paying job offer, and my life changed. It changed for the better for a short period of time, but then it kind of changed in a dramatic way, where I went through a series of jobs and of years where my life was kind of in a pruning cycle. I remember my first job, I left and I was making in the mid 50s, and I took a job that was in the low 50s. Okay, I took a pay cut, to move. And I've done that before, and sometimes you have to do that. But in all of that, what we're thinking about is understanding what season you're in. Some of us are in a savings season. You're in a season where you need to put in a little bit more money in your 401k. You need to get your life insurance policy. You need an IRA. You need to, secure your assets. You've got everything pretty much taken care of. Your debt's under control. Your bills are under control. Hey, more power to you, okay? But a lot of us may be in a reviving or surviving season. We're really coming out of a surviving season where you're living paycheck to paycheck. You're, unfortunately, and there are people that are kind of robbing Peter to pay Paul, with the check cashing, the loans. We really encourage you all not to do that. I never had to do that, but my heart goes out to individuals when you have to feed your family. But there's still some decisions that you can make in that time frame that goes back to, what can I cut? What do I have to have? Even
what
right
can
now,
I sell?
What can I sell? I'm a liquidator. I sell stuff in a heartbeat. And I've been there and I've done that before, where I was in my mid 20s or even in my late 20s, and I had a guitar and I had some other things that were very special to me. But I needed to eat. I needed to take care of my family. And I had to, liquidate those things. So I've learned, to be able to look at things and assess a cash value. I sometimes joke with Maria about that. She asked me, if I give you a gift, are you going to sell it? And I said, no, of course I wouldn't sell it, but I do know how much it costs. I could get on Amazon or eBay or whatever. But having that type of orientation sometimes can get you through the tough part. From a reviving standpoint, Maria and I are kind of in a reviving season. When we thought about our first year of marriage, one of the things that I did, is really, I looked at what I didn't have, which was a lot. I looked at what Maria had, and she's a collector and a preserver, and she's got, phenomenal clothes and outfits and furniture, and so we were pretty much able to furnish our apartments and whatnot. We've moved, I think, 3 times now.
Twice. 3 times.
Once, twice, 3
wow.
times. Yeah.
3 times.
So our new house is a recent move. So to God be the glory, we've been able to, you know, furnish stuff. It's not the newest stuff. It's got bite marks on it from Garrison. That's his favorite mark in his territory, I guess. But we realized that we were in a asset acclimation season, meaning that there was stuff that we needed. We needed a new bed. We needed furniture. We had a baby.
He needed a bedroom
set. So in that season, things look a little bit different. You may see your savings dwindle just a little bit. You may see yourself open up and use credit wisely. You know, that maybe is another topic that we can talk on. We'll definitely touch on later, but maybe that's another series of how to use credit wisely and the impact that that has on you. But now we've transitioned from that surviving season into reviving, and now we're looking forward in our early to mid 30s through our 40s to really a growing season as well. And we definitely hope that a lot of you all are growing too. Our family is growing. Our friends are doing well. We're just in a unique period of time where it feels like this is that special time when the days are a little bit longer, when spring's getting ready to transition into summer. It's probably a favorite time for a lot of folks. That's that time of the year that we feel like from a life cycle and financially that we're moving into. But we definitely resonate and know what it feels like to survive. And we're prepared and preparing ourselves, storing up some things away if we ever get back into a period where, what happens if I were one day something happened on my job, or something happened to Maria, or we had to pay big medical expenses. We're preparing ourselves in the good times for that. All right, so we talked about financial makeup. We talked about what season that you're in. What are some of the tools and some of the things that we use and that we do? So budgeting or tracker, that's a very important thing. All right, so for a lot of folks, budgeting can be an issue. It can be grueling, it can be difficult, it can be hard to maintain. For those of you that manage the finances, and usually in a marriage or in a relationship, you've got one person that kind of manages the finances. This is a quick commercial break for us, the way that we're oriented. We primarily operate out of one account. Now Maria has a couple of accounts for business purposes, but both of us have transparency. She knows when the bills are due, what they're due, even though she doesn't pay them. We've got an app that we use, and I'll talk a little bit about that. But I, for the most part, manage the finances. We have conversations about that, on a pretty regular basis. And we've had to learn how to adapt with each other. I used to use a phrase, we need to sit down and talk about that. And I think I was literally meaning that we need to sit down and talk. But I would encourage.
But to me, I was like, sit down and talk about it. Okay, here is A, B, C, D, and here is X, Y, Z, and what is there to talk about? Like, it makes total sense.
For me, I manage the budget at my job, and we sit down and we talk about it. So,
but
I can't. It's a large budget, but I can't. I had to learn that I had to have a different set of circumstances at home. So that's a tip for whomever is managing the budget, which is it's a major thing.
You got to meet your partner. You guys have to work together on that. Finances used to be a very sticky situation for us in the beginning. And I think that it had a lot to do with pride, because my husband desired so much to be the breadwinner and to be able to take care of our home, that when it came down to us talking about what his abilities were, I think a little bit of it was pride. I think a little bit of it was just having to deal with me, where I'm just a little bit more nonchalant about finances. So that can probably be a little annoying when you're already prideful because you want to be so much further than you are. But all of those things kind of washed out and worked themselves out because we were very willing to work with each other. When the angst would rise up and I can see the frustration, or if a financial conversation was coming up, it was like, how do you need me to say this to you? Or we would just kind of walk around it, but not on eggshells. We would definitely get to the meat of things quickly, but we definitely learned our language and how to speak with each other.
Yeah, and you'll see that because both of us had to make adjustments in the way that we just dealt with each other. And what we got, and what you won't hear from us, you won't hear, you need to have one account. You need to share everything. You need to have your own, combined second account. And you're not going to hear that from us. If you operate and she pays the car and the house and the insurance, and you pay the electric bill, however you have things set up.
You guys are still all doing it together.
All we encourage you to do is do it together. If you're single and you just got yourself, hey, more power to you. Practice some good lessons right now, okay? But understand from a financial standpoint, there's a general level of financial literacy that that is out there and available. And we'll talk a little bit more about that later. But when it pertains to talking to a specific individual or partner, you really have to get outside of yourself. I had to get outside of myself, Maria's outside of herself, and now we're very fluid and dynamic in our conversation.
Like we can have a financial talk at the drop of a dime. Because sometimes I'll just be like, all right, I'm touching base, where are we at?
And another thing is I've learned when I kind of really want to sit down, we may not sit down, but I've laid everything out in a way that I know that is, you know, here's what we have going out, here's what we have coming in, here's what we have on the horizon, here's what I need help with. You know, there's just those little bitty sound bites, but I had to learn that. So take time to really learn your partner.
Right, and tools definitely play a big part in this. I think he's talked about budget trackers and things like that.
Yeah. So I have a spreadsheet that I use, and it's a spreadsheet that does two things, all right, or a few things. So one, it lists all of our accounts. Okay, and I basically have it listed for either the minimum of payment or the payment that I make. So I can kind of adjust and see where our cash flow is going to be at the end of the month. So it has all of our accounts, and on another tab, it has all of our passwords as well. So periodically, we'll probably do for a password update. I'll update Maria on, hey, here's all of our accounts. If something were to happen to me, this is the one spreadsheet that you need to go into to access any of our accounts. A little bit of a pro tip, we have a very transparent relationship. I have my Facebook, my Google, all of my accounts.
We have everything on there. Those things are all important. If something happens with my account, it's just going to sit there empty.
Exactly, so something needs to be done. All right, so back to the core of that. I've also got a projection out on where I think our income is going to go. You know, Maria's business is growing. I have a conservative scenario and I have a very aggressive scenario. And I can kind of plan a little bit off of both. I know that we're going to have to replace our car sometime in the next 2 to 4 years. You know, hoping for 4 years, but it could be 2 years. Okay, I've got that placed out to what that looks like. I know, you know, when we can start paying off certain debt that we have and transitioning that into others as well. That spreadsheet, and maybe I can make a dummy, like a blank version of it, and post it for you guys somewhere on, maybe on your blog. We can post it in that little corner. That's just as an example, just as a template, as a starting point for you. But another thing we use is apps. This is an app that I use. It's been rebranded called Mint Bills. Now, a lot of you all may be familiar with Mint. It's an Intuit company. Intuit is the company that owns TurboTax and QuickBooks, excuse me. I think I got that right. I used to have Quicken and QuickBooks. I can't remember.
It's been named so many things.
Yeah.
I mean, even since we've had it.
This app, it used to be Page Once, and then it turned into Check. And then now, but it's Mint Bills. It's separate from the Mint app. Okay, they're looking at combining those. It doesn't support all accounts. If you have any accounts with like Synchrony Bank, which used to be GE Capital, they don't support that, but it supports regions. It supports some of our credit cards that we have, our student loan providers. It allows me to look on a snapshot at any given point to see what bills are coming up. And it allows Maria to have transparency versus me having to, you know, hey, this is when this bill is due. Hey, this is when that bill is due. So that's a great app. Whether you use QuickBooks or whether you use Microsoft or Page Once or any of the other apps that we don't know, I would encourage you to use technology to your benefit. It can definitely make you more efficient. We are big fans of, you know, online bill paying, consolidating. I wouldn't pay for any of those services. Mint offers a payment where you can make a quick payment. I don't do that. I just go straight to my user and I have everything set up through Verizon or through whomever that we use. But that app in a snapshot is great and helps have transparent financial conversations. This is a little bit of a shared topic on this next one when it comes to financial literacy. For those of you that are just kind of scared, I don't know what Wall Street is all about, I don't know what this or that, just dive on in there. There's material, there's books out there from a financial literacy standpoint that can really help you. I listen to a podcast called The Motley Fool, and you can go to fool.com. That just has a good investors standpoint, especially for beginners as well, and also for intermediate folks and advanced too. Yahoo Finance is good, the Wall Street Journal. There's a lot of financial information out there that you can either listen to or read. There's always tips on Yahoo. I go to Yahoo daily and there's always tips about, here's what your credit score means. Or here's, did you know that the FHA is looking at reducing mortgage insurance? What does that mean for you? What's the minimum down payment for a home? In any specific given time in your life, you're probably going to be dealing with a major topic. Like for us recently, it was a home. I needed to research what are the financial ramifications. Now for us, it's like life insurance and Maria getting reopening back up some of her retirement accounts. So there's always going to be something. So have a focal point, but also have a breadth of knowledge as well, because that will be your friend as you start to look forward to enjoying the rewards of that growing period in your life versus that just surviving, getting by. And Maria's got books that she's had throughout her life as well. Susie Orman.
Yeah, and I started when I was single. I just feel like finances are important and you should have some sort of grasp of them even as a single person. You definitely don't want to put all the pressure on your mate. Even though he handles it, we both work together. So those things have definitely helped me, and they help me to focus in and not be frivolous. Like I said, I'm a spender, but I don't just go and spend frivolously anymore. I have a family, so I'm not out buying expensive purses and shoes. Those are not things that I do anymore, and I'm quite alright with that.
We'll talk about, I just had a thought, but we'll talk about it later because it's coming up in just a couple seconds. Back to the gurus thing, Maria talked about how she has some Susie Orman books. Again, we're not here to tell you that Susie Orman's way to do it or Dave Ramsey's way to do it is right. Follow somebody, and if it makes sense and it doesn't sound too good to be true, typically if it sounds hard, it's probably the right thing to do. Unfortunately, Dave Ramsey would tell you that you need to save up to buy a house or save up to buy a car. That's hard stuff, okay? I'm not gonna say I agree or disagree with it. I think you should use credit to your benefit, not your detriment, but also make sure that you understand what you're getting into as well. I really want to build off of what you just said. Maria talks about like frivolous spending or whatever. When you're dealing with a spender or a saver, that's one designation, but there's really some other thinking that's in there as well. There's what you place value on. And what I have to really say with my wife, because part of this gets into goal setting, and we're kind of coming to a close a bit. It's important to have goals. It's important to have plans. One of our major goals our first year was for me to get a new job. We did that. Second year was to have a baby. We did that. Third year was to have a house. We did that. Now we've kind of we are resetting right now to really understand what does that next trajectory of 3 to 5 years look like. One of the important things that we talked about when we first got married was the importance of travel and of going on not just little weekend trips here and there, but like a really nice trip. And it's easy to say well, that's not valuable, that's a waste of time, that's a waste of money, that's too much money. You really have to understand what your orientation is with your partner or your mate. I know that means a lot to Maria. So what I've been able to do is we've been able to work together and say, you know what, for our 5-year anniversary, we're gonna do something really nice, okay? That gives us time to save for it, that gives us time to plan for it, that gives us time to get our house in order, to get reward points, or whatever we need to do to fund that, but that also gives what I call a hope rally point. That gives us both something to focus on and to know that right now we're choosing not to buy this because it directly impacts us later on down the road. So for my savers out there, if you're ever in a situation where you're feeling a little bit of tension with your spender, they want to do something, really don't just say no. Help them understand the context. And it's not a help them as in you're better than them, okay? But help them understand the context of why it's no. Is it no because you've got a heavy or slate of bills getting ready to come up? Is it no because it violates one of your principles? And our principles will change. There'll be a day when we'll be able to use credit a little bit differently. Again, we're coming out of that surviving time frame where you just had to use any available assets that you had. Or is it just not the right time? There's a difference between no, not ever, and no, not right now. For my spenders out there, like with Maria, there's some stuff that she buys that if I looked at it, it's gonna last her for 10 years. There's some stuff she's got in her closet she's had for a long time. There's stuff I got in my closet that I can't wear from last year because I ripped it, torn it, I'm hard on it. I got a good deal on it, when I bought it last year, but I have to buy it every year, okay? So instead of buying it once for $400, insert whatever, that would be.
A pair of shoes.
A pair of shoes, and wearing them for a decade, getting them resold a couple times, okay? buying $100 pair of shoes, over and over and over again, that kind of adds up. So you have to understand that, again, saving and spending, that philosophy between the two partners, it's not a designation of who's good and who's bad. It's a designation and understanding how do you get harmony working in your relationship together. So that's something that we had to come to grips with as well. And I'm really, really appreciative that my wife is a spender. She compels me to look at things a little bit different. And I'm seeing value in different places than I have before. And again, on goals, that's a very specific example for us. There are other types of goals that we have as well. There are savings goals, how much do we want to save? There's this great like 1, 2, 3, 4, 5 type goal. Like we're a little bit behind now because it's in January, but on January 1 you put $1 in your savings account. January 2 you put 2, so forth. You put 3. And by the end of the year, on your last day, you put $365. And if you did that, then you would have, a pretty large sum of money, in your savings account. That's something like simple that people have done. But there's savings goals. Savings includes 401k, retirement accounts. Hey, I'm going to put $10 a week in. There are 529 plans for college. There's, other plans that are for insurance as well. They're spending. Hey, I'm only going to spend this much, or I'm not going to spend this much. Those are goals that folks have as well. We have spending goals based on groceries or eating out. There's those variable places in your budget that can really snag you. What are you going to do about debt reduction? Okay, we all have debt, and it's easy to just do this right here, and I've got it in deferment, and be careful with deferment. That can come back to bite you. Maybe another roll-up topic that we have on how you service your own debt. But debt reduction, we have a plan on debt reduction. Maria knows, how we view the house, when, things change there, from a car standpoint, from student loans. And then there's asset acclimation as well. We talked about in our first 3 years, we needed to move, we ended up having to get a new car, but we had to get things for our son, and we got our house. So our asset acclimation is slowing a bit, and we can be a little bit more strategic. Hey, we're going to invest in Maria's business in this area. We're going to strategically do this, and we can kind of meter those things out. But that's really important for us to understand, as well as our priorities are shifting a little bit. But the most important thing there is to talk and to be very, very fluid and to be open. Be open with yourself about what you want, and it's okay to want stuff. It's okay to want to travel. It's okay to want to.
That's a big thing. I'm a person sometimes who thinks out loud. So I'll think that I want to do something and I'll say it. And when we first got married, it used to freak him out because instantly he's running numbers, and I'm just talking. And I had to
learn to be quiet. I had to learn to just let her talk.
Because he would shut me down.
I would just dream crush.
And he would just be like, that would cost blah, blah, blah. And I'm just talking. I'm just going through the motions, and it'll give me an end result. And one thing he has learned about me is when I'm serious about something, I come with a financial plan like that. I will figure out how to get it done, and I will make sure that it's not a burden to our home or our household income, and I move forward from there. But if I'm just talking about something, now he just lets me kind of daydream.
The cool thing about being able to talk as well is I can challenge Maria, and this is what, I'm corporate again, she has a very, very variable income. I can tell her, babe, the house can't do it, but if you can find a plan to do it yourself, fully support her, And she's never all alone. From an overhead standpoint, the house, carries its share, but a lot of times she gets back to the house too. So we've learned what really works well for us. She's got a trip coming up pretty soon, using combinations of points. The house is helping a bit, but primarily it's kind of on her. 80% of it's really on her. And when I say on her, that is not to say that the safety net or backstop is not there, but there are times when she's my safety net or backstop, and I had to get over that. As the person whose income we live off of, I have no backstop. It's just, if something goes wrong, that's it. That's an incorrect way to look at things, and I was assuming a higher stress level than I should have, knowing that I have a wife that at a drop of a dime would do anything, to help support our house, as long as she knew the scenarios or situations that we have. So for my people that are managing the budget and communicating, that's a heavy burden. That's a big load, whether you're male or female, breadwinner, non-breadwinner, whatever the situation that you're in. But also know that if you've got a spouse, you've got a partner, you're not in that alone as well. And don't take those burdens upon yourself. And know that the conversations that you have with your significant other, they'll just get easier with practice over time. You may have some hurdles or some bumps in the road, but really there's no reason why finances should be a perpetual issue for you unless you legitimately choose for them to be. When you have a gambling issue, making poor decisions, using credit the wrong way. Let's be better than those things and really not, and really address the true issues behind that, which is usually emotional. There's other stuff going on versus, I'm just not good with money. There's some other stuff going on there. Last thing we kind of want to cover in this session, again, if you guys want any other builds on this, it was so hard to just really focus down, what do we want to talk about, but please give comments and questions about if you want to hear anything more, or examples or scenarios, but just some tips, all right, just some tips, just real quick. Okay, I talked about some apps, talked about the budgeting of the tracker. We'll post the a shell of our tracker that we use. There's a lot of budgeting tools out there, so that's the first tip. Use something, I always joke that, ladies, a good man should always have some type of tracker, know where he's going to be economically, financially. Okay, another thing to understand is certain accounts, and most folks may know this already, but your cable bill. Cable, you get that promotional period, and they're always, you're paying $99, for the triple play package with Comcast, or for AT&T, and then the promotional period runs out, and you're paying like $150. Okay, you may not be ready for that. All right, you may not be ready for that sticker shock later on down the road. If you have your tracker, you can plug it in and see if you'll be ready for that. However, call them, tell them, hey, I love the service, I don't love the price, what can you do for me? A lot of times it is cheaper for them to retain you on that promotional period. It takes a little work on your part than it is for them to lose you. Another one, look at your phone bill. Look at your phone bill at least quarterly. There's so much stuff going on right now with like T-Mobile and AT&T and Verizon and Sprint competing. I'll give you an example. Maria and I were on an 8 gig family plan on Verizon. And I knew that there was a lot of stuff going on and there were changes that they were making, but I didn't realize until I went in, I think it was a couple months ago, and we were getting ready to go over our data. So we were just gonna go up to the next tier, which was 10 gigs. Well, that 10 gig plan was actually less than my 8 gig plan. And the 15 gig plan was less as well. There's some changes that they had made, okay? So if I had kept my plan, I would not be getting as much data as I could get. So I've switched us to a 10 gig plan, which was less than my old 8 gig plan. So we're saving money and getting more data, okay? All because I really monitor and I look at, those type of bills as well. There are other examples of that. Your insurance, we've got a great insurance agent that we work with here in Tennessee. With Nationwide. I'm not a big fan of switching insurance all the time. I like longevity and continuity. But talk to your agent. Hey, understand why your bill increased. Was it your credit score? Was it a program? Do they have any programs that are available to you? I got us on a new program that dropped our rate by like 10%. Okay, so if you don't ask, you don't get. That applies to a lot of things in life, okay? So make sure that you're checking up on those accounts where you can negotiate a bit. Bill floating. This is one of those things that, pay my bill on time and do this and do that. On time means different things to different bill collectors. There's certain credit cards where if it's 12 o'clock, the next day you're late, okay? You missed your bill, all right? But there are some folks like student loans, there's a little bit wider of a grace period. A lot of us understand grace period with rent, like rent may be due on the 1st, but it's not late until the 5th. When you're in that period of surviving, okay, or you're in that period of reviving, okay, and your cash flow is really, really important, understanding those grace periods is a big deal, okay, because you may be able to float things along. That's why having a tracker is important as well. All right, you're not going to hear financial advisors talking about this, but this is real talk. This is like, hey, how do you survive, buy a house after 3 years ago both of us just surviving? How do you get to this point, having to go through those survival years? Some of that's going to take a little bit of research to understand. Is it 30 days? Is it 15 days? We have a new mortgage provider, a new mortgage. Okay, we just bought a house. All right, our grace period, you're not late until the 15th. All right, now I have my bill set, on a certain day of the month, but it's not the 1st, okay? because I'm not late. All right, so that's a strategic decision that we made to understand from a cash flow standpoint, you know, how we're a little bit heavy at the end of the month. Okay, I've got some support payments for my 2 kids that live in Arkansas. I've got other things that come out. You can change your bills, all right? You can change their due dates. A lot of your bill collectors will work with you on that as well. Okay, that's another important thing. So make sure you do your research, your financial literacy. The last thing that I would say is understand your credit score, guys. Check your credit every quarter, at least once a quarter, okay? That's to help see if there's any fraud, any activity, to monitor your success. You never want to get in a situation where you need to make a big decision like buy a car, buy a house, apply for a job or whatever, and all of a sudden you get some negative information on your credit because you haven't, you know, monitored that. I don't believe in, you know, credit monitoring services and other things. I think if you can stay on top of it yourself, you can manage that. But again, credit may be a whole nother topic that we can talk about as well. And I know it's important for a lot of people in terms of, you know, what your spouse brings to the table and what you have too. Good?
Yeah, all right.
That's really all that we have, guys, on this topic. Again, like I said, hit us up in the comments, ask questions. We hope this is helpful. It's probably the start of some greater dialogue that we can have with you. We're transparent and real. We want you all to have the best success. There's enough gravy, glory, and gold out there for all of us to get our share. And we just want you guys to make it to whatever, wherever the place that you want to be is. And we hope that we enjoy watching you get there and that you'll take somebody along with you as well.
Yeah.
All right, that's it.
So make sure you comment down below of anything else you might want us to speak about. We're always taking notes. We do have some things in the works. So you should be seeing more of these. We don't have a schedule for them yet, but we will work diligently to get them out to you. And it's been our pleasure, and we will see you on the next Small Talk. Bye.